I've been walking this line, got nowhere to go, chasing down a feeling I'll never know. They told me settle, but I can't stand still. I'm a ghost on the run, but I'm chasing the thrill. I'm picking up pieces of what I've lost. Every lesson I learned had a heavy cost, but I'll wear the scars like a badge of pride. I'm just trying to stay ahead, still trying to survive. I'm not here to fit, I'm here to break. I'll crash through the walls they try to make. If I'm sinking in my own way, but I won't stop till I make it through the day. Running till the morning, running till it's gone. I won't stop till the fire's out, and I'm moving on. Running till the morning, running till it's gone. I'll keep pushing till the edge is gone. I'll keep moving on. I've been living fast, but I'm running late, burning the bridges I shouldn't have made. I've seen the highs, but the lows hit harder. I'm a fighter, but this life's a starter. They say, hold tight when I'm slipping away, but I'm not built to listen to what they say. I'd rather take the risk, I'd rather feel the burn, cause I'm done playing safe, it's my turn. I'm not here to fit, I'm here to break. I'll crash through the walls they try to make. If I'm sinking in my own way, but I won't stop till I make it through the day. Running till the morning, running till it's gone. I won't stop till the fire's out, and I'm moving on. Running till the morning, running till it's gone. I'll keep pushing till the edge is gone. I'll keep moving on. Running till the morning, running till it's gone. I won't stop till the fire's out, and I'm moving on. Running till the morning, running till it's gone. I'll keep pushing till the edge is gone. I'll keep moving on. Every mistake, every scar's a mark. I'll use it to fuel the next spark. I'm not running from the world, I'm running toward chasing what's real, can't afford to be ignored. Running till the morning, running till it's gone. I won't stop till the fire's out, and I'm moving on. Pushing till the edge is gone. I'll keep moving on. Running till the morning, running till it's gone. I won't stop till the fire's out, and I'm moving on. Stop till the fire's out. Running till the morning, running till it's gone. I'll keep pushing till the edge is gone. I'll keep moving on.
Oh, brother, oh, brother, oh, brother. Good. Whoa there, brother. That doesn't sound right. That's not my normal voice, I promise you that. Hello? Is this not switching? Oh, shit. It's not switching. Why is, I can't switch my voice?
Hello, testing, 1, 2, 3, testing, is that working? Hello, testing, am I coming through? Hello, attention, mere peasants, this is your voice speaking to you, is it working? Hello there, Clarice, am I there? Did I work it? Is it good? We're back? Fuck yeah, brother. The fucking man couldn't keep us down. Something. I just had to restart. I had to do the old unplug it, plug it back in type of a technique, and it apparently worked. That's the major thing I learned when I was studying computer engineering for a little bit in college, that the major fix to any technical issue is unplug it, plug it back in, and it fucking worked like a charm this time. That's what 4 years of studying engineering does for you. So, hey, we're back. I'm happy to be back because the market's pretty fucking green right now. So if you were degenerate enough to swing a bullish position over the night, I mean, it was low statistical odds, but man, it paid. But it's the same thing as betting on green on the roulette wheel. Is it a good bet? No. But when it hits, it makes you feel all sorts of good. So if that is you, congrats. Seriously, massive congrats. You took a big risk and it paid off nicely. And right now we are seeing a beautiful green gap up in the market. So what I want to do is break down why we're having such a beautiful green, bullish, neon utopia gap up. Then we have some other news to go through. I'm going to go over the major things you got to pay attention to today. And then we're going to talk a little bit about earnings as well, because we just heard from Tesla, and we also have other individual equity updates that relate to specifically Meta and the fines that they're under, and a little bit of, I believe, Apple. So we're going to be touching on all of that, but seriously, I just wanted to say massive congrats to all of you guys who, like I said, you sacked up, you put your sack on the table, you swung that bullish position overnight, because it is paying bigly at the moment. I mean, you could even see it right here. Dow futures rally 700 points after Trump softens his stance on Powell. And that alone, this little headline alone, is kind of the TLDR of right now why the SPY is gapping up 2.4% after gaining 2.6 yesterday. Right now, the Nasdaq is gapping up 3% after gaining 2.6. Tesla, yes, it had earnings going up 4.6% yesterday, currently gapping up 7.7. And you have Bitcoin holding almost 94,000. So folks, it's not just stocks, it's also crypto. We are seeing a lot of green across the board. Rumble is down. Why in the world would Rumble be down? Unable to connect, but I put in all the right stuff. Dude, hang on. That seems to be a secondary problem of what is going on in Rumble. I will try to reconnect it. I put in the stream key properly. I put it in properly, I promise you. Sending data. I think Rumble might be actually down. Is it sending data? Is it going to work now? Okay, it looks like it's up. Once again, I just had to toggle it off and toggle it back on. Apparently, that's the cheat code for life today. If something's not just working, this is now the second encounter I've had today where something's not working, turn it off, turn it back on, and bada bing, bada boom, it is working. So, folks, take it as a tip from me that's all you have to do, folks. That's all you have to do is turn it off, turn it back on. I highly recommend you try it with anything in life, whether it's your own technical issues, your car, your wife. Just turn it off, turn it back on, and most likely it will start working appropriately. But hopefully you guys can get your things working pretty soon, because you're not going to want to miss what's going down in the old market today. So yes, obviously in the pre-market, you're seeing quite a bit of green. And based on the newest options positioning that we're seeing, I think it actually could have some legs. Obviously, there's some key levels that I want to see the market get above and hold. And that to me will be a big indication that maybe, just maybe, the bulls are now going to be putting up a giant fight. So I'd be very excited to see that. But I also want to point out how this push, if you took advantage of it, like I said, massive congrats to you. You 100% deserve it. But what is currently going on between the administration and official Wall Street, more specifically JP Morgan, is complete and utter bullshit. Wall Street was told what is going on in a closed door meeting. Yes, you are hearing me right. Just yesterday, the Secretary the Treasury Secretary, Bissett, had a closed-door meeting with some of the biggest honchos, head honchos in all of Wall Street, and basically said, hey, this is kind of what's going on. And fucking surprise, surprise, guess who was loading up? And guess who probably made billions of dollars in the past, day and a half of trading? Utter bullshit. So I'll be getting into that, obviously. Has me a little bit fired up. Trump says he has no intention of firing Fed Chair Powell. That's the big news as of market close kind of yesterday, overnight, and then obviously this morning, the market really, really liking it. President Donald Trump says he has no intention of firing Federal Reserve Chair Powell before his term leading the U.S. Central Bank expires next year. He probably can't fire him anyway, and even if he could, it would get so, the length of that battle would get so drug out in court that he'd be at the end of his term anyway. So it's not going to happen. Trump has recently ramped up his rhetoric against Powell and declined to rule out the possibility of taking the unprecedented step of firing him. Once again, probably could not. U.S. stock futures rose sharply across major indexes following Trump's latest remarks. So that's the big news. Trump flipped substantial China tariff cuts in a trade deal, kind of the old 1-2 combo. Hey, I'm not going to fire Powell, and I'm going to play a little bit nicer with China. As you can imagine, those two things paired together is exactly why we're seeing everything absolutely rip to kingdom come. But let me take one quick step back and return to yesterday. Midday yesterday, Bissett, the Treasury Secretary, says he expects de-escalation in U.S.-China tariff fight in the very near future. So that came out around midday. And actually, in fact, it was this pop right here, right around noon o'clock, right when we were all breaking out our Lunchables, getting ready for a normal, casual lunch, midweek lunch. We saw the market pop a little bit more. And that was on this news of obviously de-escalation. And at first, when you see it, it can seem a bit negative, but in reality, it's more of the administration's admission that they have to play a little bit nicer with China. And granted, a little bit after that, we did get hit. This had a lot more to do with a report from Politico, and this was all in the update video yesterday. But Politico had this update that we're making some progress, but it's a little weird because they might be months out, and it's on the report that these deals might be months out, that we took a bit of a hit. And then we got another update from Bissett, and that took us down even further. And then we started to pop around 1 or 2, and that had to do with the White House press secretary, Leavitt, basically saying there's 18 deals on the table, written up proposals right now. We're playing a bit nicer with China, and we started to pump. And then obviously post-market, you can see right around 17:15 is when we got the news that Trump has really no clear plan to fire Powell. And so that's pretty much the rundown. But what I think is interesting is this midday announcement. Treasury Secretary Scott Bessent said he expects there will be a de-escalation in President Donald Trump's trade war with China in the very near future. All right. That obviously sounds like a pretty important update, but what I'm about to show you is gonna, not only me, but it's gonna drive you up a fucking wall. The amount of insider trading currently going on in the administration is seemingly sky high, truly seemingly near infinity. It just doesn't have a ceiling. Just time and time again, we are seeing people in the know front running all this very important information, these very important announcements, making a ton of money. And at first, this might not seem like one, but this one wasn't just like a person or two. This was the biggest players in Wall Street front running this information. Check this out. Retail investors were just cheated. 100%. Yesterday, noon o'clock, Treasury Secretary Bessent says he sees de-escalation with China and the current situation is unsustainable. Great. Okay, we all have that information. The issue here is it wasn't a public thing. The comments were provided at a closed-door investor summit hosted by JP Morgan. This summit was not open to the public or to the media. Then at 5:18, obviously after the market closes, President Trump says tariffs on China will not be as high as 145%. Bessent effectively told a closed group of Wall Street investors that de-escalation with China was coming before the public knew. And then surprise, surprise, can retail take advantage of it? No, because the announcement came after the market closed. They knew hours in advance. Bessent effectively told a closed-door group that they were coming. The result was a move of 5% in the S&P 500 for a total of $2.2 trillion in market cap. Now, obviously, did one player get all that money? No, but many players made billions of dollars off of this. Investors at JP Morgan event were able to front run these headlines. How is this fair for retail traders? It's not fair for retail traders. It wasn't open to the public. It wasn't open to the media. Obviously, this is becoming a very a boys club. cronyism. And I find it particularly frustrating because, in my opinion, that was one major thing that Trump seemingly ran on, is that he ran on this populist, I guess, foundation of the elites, the people in the swamp. They've been taking advantage of the average Joe for far too long, and I'm going to do something about it. That was seemingly, like, obviously not verbatim, but that seemed to be a lot of his rhetoric. And thus far, with all the craziness and like the trade war, I understand why he wants more equal trade relationships. I'm not against that at all. Obviously, maybe there's a little bit of a better way he could have gone against it, but hey, that's not my job. I'm not running the administration. I don't have some fancy schmancy PhD on my wall about the best way to do it. So whatever. It just feels like there maybe is a little bit of a less chaotic way to do it. But like I said, maybe there isn't. I don't know. That's not my forte. What is my forte is knowing when I'm getting absolutely fucked. And this guy who ran on this entire idea of, no, I'm going to help out the average Joe. I am not going to be a politician, a president for the elites and for the powerful. And fucking guess who has been crushing it this entire time? The elites and the powerful. And when I'm saying Trump, I should be clear. I'm talking about the Trump administration. For all I know, Trump might be fuming. He might be pissed off individually as a person that this is happening. And he does, like, just like the administration is many, many people. So I am not in any way campaigning that like Trump is the individual person. Maybe he is the individual person. Or maybe it's Bissent, or maybe it's some random staffer, or maybe it's a chief of staff, maybe it's a cohort of people, maybe it's an intern who has a little bit too much access and they're telling their buddies. I don't know. When I say Trump, I say the Trump administration. I have no knowledge of the fact, is it Trump individually? I have no fucking clue. But what I can tell you is the Trump administration, information is getting out there. There is shit that is going on that is clearly beneficial to the rich, the powerful, the elites. They're taking advantage of it while we're all here with our thumb up our ass saying, what the fuck is going on? And the only way to actually, I guess, take advantage of it is to just get absurdly lucky. So, I mean, this is the latest example, but over the past month, over the past 2 months, there are countless examples of people front running the Nvidia news, the Apple news. We had some crypto updates. We had people literally just front running what was the Trump announcements were going to be. There is clear information, especially in the options market, of people making outsized bets, also in the crypto market, massive leverage bets that were at the right time, the right place, no risk, huge rewards, and there's no fucking way people are just getting that lucky, especially with those size bets. It is absolutely insane. And like I said, when I say Trump, just to be clear, I don't need the 50% of you in the audience right now that voted for Trump. I don't know if he fucking did it. Maybe he did. Maybe it's someone else. Like I'm just saying, clearly, this is a Trump administration decision, and the decision is being telegraphed earlier, and certain people are taking advantage of it. They are clearly taking advantage of it, and it is fucking wild. But anyway, hopefully we're not too late. Hopefully this is the start of a nice trend we could all take advantage of. And like I said, I'm hopeful. We got other news. India considers zero tariff on Harley-Davidson bikes in U.S. talks. I don't know why Harley-Davidson bikes are such a hot commodity that they would be involved individually in U.S. talks, but I guess in India, they like to rip those hogs. India is considering cutting tariffs on high-end motorcycles to zero as part of a potential trade deal with U.S. I don't know why it was like such a massive thing for them, but apparently that's what they're doing. With it, I don't want to be that guy. Yes, I'm seeing a lot of optimism. I'm right there with you. The SPY gaining 2.6 and then another 2.5. The Nasdaq gaining 2.6 and then another 3%. We have Bitcoin ripping from the low 80s to the mid 90s. We have Tesla popping off. This all seems green. As soon as we look at the heat map, we're going to get blinded by the amount of green in our face. But I should let you know, Jim Cramer has some hot comments on this. Jim Cramer says the bear market rally could become a real recovery. I know from market open until now, I've gotten you guys all amped up. You're like, dude, I love the fact that the options market is turning around. I love the fact that there's better rhetoric, more bullish rhetoric. I love the fact that just price itself is on a rocket ship to the moon. I know I've gotten you guys amped up. You're probably feeling all hot and bothered about it. But now I have to take that away from you. Like a baby holding a piece of candy that I would prefer to eat rather than that infant child, I'm going to snatch it away. I'm going to steal the joy right out of your cradle that I've already built up this morning because I'm that kind of a person. I have to be the messenger that tells you Jim Cramer believes that this bear market rally could become a real recovery. So just like that, your life can turn tipsy-turvy. It can go completely upside down, and it's just stolen from you. I feel like I literally just stole I just stole thousands of people's of joy. So I guess I'm that guy. But it is my job as the world's leading financial degen reporter to tell you all the impertinent news. And this is clearly pertinent news. So I'm sorry. This is probably the one thing I can currently find going on that just might end this whole thing. So if I guys I'm sorry. I came out of the gate. We had audio issues. I had to recover. I came on with probably a little bit too much energy. If anything, I probably should have led with this and like, just so you know, he's saying this, and then told you everything else, because I feel like I kind of just dropped a little bit of this on people. So remember, it's not me. I'm just reporting the major news. But yeah, just so you know, if you are going bullish, you're on the side of Cramer. So yeah, good luck with that. Anyway, bringing it back to today, 15 minutes into the trading day, we're going to get some manufacturing and services PMI numbers. At 10 a.m., we're going to get new home sales. And also, Bassett, Treasury Secretary, the guy that had that secret closed-door meeting. Well, it wasn't really secret, but it was a closed-door meeting. Public wasn't allowed. Media wasn't allowed. JP Morgan event that everyone there definitely fucking front-ran this news. He's talking at 10 a.m. as well. And then crude oil inventories coming out at 10:30. Just so you know, for tomorrow, durable goods, and then Friday, not really anything. We are in earnings season. Obviously, Tesla reported after the market closed yesterday. I will be paying attention to that, or we'll be going over that. This morning, Boeing, AT&T. After the market closes today, we're going to hear from old Chipotle. And then tomorrow, American Airlines, Southwest, Intel, and Alphabet. I think for the remainder of this particular week, Intel and Alphabet are definitely important ones. But next week is definitely when things get pretty exciting with some of the biggest heavy-hitting tech names. Taking a step back, let's talk about Tesla. Tesla reports 20% drop in auto revenue as first quarter results miss Wall Street estimates. Yeah, they might have missed, but then this kind of shows you yesterday when people were talking about like, oh, someone I believe had a question for me of like Intel and like, will it be, won't, and right here, Tesla missed. And yet look at how Tesla's doing. It is up 7.5%. It closed out the day at 238. It's currently trading at 255. So this is a great real-time example of when people ask me, am I playing earnings? Understand that it's more than a quarter flip. Not only are you flipping a quarter of does it beat or does it miss on earnings, then you're flipping a quarter of what is guidance? How does the market react to it? Because we draw these lines in the sand of good or bad, and then all of a sudden, it could still be a really bad line. But if we slightly beat that really bad line, so we're still in the quote unquote negative bearish territory, the fact that it's still quite a beat relative to what people thought it would be, all of a sudden you get these like these pops. And literally someone just yesterday in stream was saying, oh, I think it's going to go down. Like people aren't buying. It's going to be like a drop. It was a drop. But yet, guess what? It wasn't as bad as people thought. And that's exactly how you get a stock going back to the upside, even on bad news. So when people are obviously, speaking of like earnings and playing earnings, understand that it is a complete crapshoot. You could have very bad numbers and actually go up. You could have very good numbers and actually go down, because it's not a relative measure of the numbers themselves. It's the relative measure of the numbers versus what people thought the numbers would be. Obviously, it also helped that we got this. Tesla CEO Musk says time he spends at Doge will drop significantly next month. I don't know your individual thoughts. I don't even know if I know my individual thoughts, but seemingly the public, especially Tesla investors, especially a lot of these sovereign wealth funds, are just tired of Musk being involved with the government and like, dude, please just run the company that we've invested billions and billions and billions of dollars into. So I'd say this sign, or this update, this commentary was definitely received well by the market. I mean, clearly Tesla's currently up more than 7%, trading above 255. They like that. They like that, hey, there's only 24 hours in the day. Even if you're spending 1 minute on Doge, that's 1 minute that you're not spending on Tesla among your other ventures that we obviously know he's spending time on. So this is probably an update that investors like. We saw it in like public panels and whatnot, that they're like, dude, come on, just go back to what you were doing before. So interesting update there, and obviously a positive one. Weird news from this morning. The World Economic Forum launches investigation into the founder Klaus Schwab for financial misconduct days after he resigned as chairman. Is anyone surprised, like, whatsoever about this? That Klaus Schwab, like the modern day cartoon villain, like literally the villain of our era, had to step down from the World Economic Forum for financial misconduct? Like, I think most of us are saying, like, we just kind of assume that this was happening. And speaking of Musk, like, there's a lot of people specifically on the left aisle of politics who are so mad because they view Musk as the reason that Trump is president. And there's a fair argument to that. Without Musk buying Twitter, being forced to buy Twitter, there's a very good chance that if that domino didn't fall right now, Trump would not be president, because it led to many other things, like obviously stating the fact that he donated millions and millions and millions of dollars to get Trump elected. And then all of a sudden you had the people on the left side saying, that's not fair. We have billionaires influencing our election. There shouldn't be this much money in politics. Let the people speak. This is a democracy. As if they completely forgot that this guy right here, this fucking villain, was the reason for the longest time that left-leaning politicians were always getting like funded. Like, if you want to know why there's many, like, this modern era, and I'm not just talking about politicians, I'm talking about judges, but basically anything where there could be money pushed behind a campaign, it is this motherfucker right here that absolutely funded it. And it, dude, if you look into his past, this is a sketchy dude. And I honestly think financial misconduct is probably the least bad thing that this guy has pulled off in his day. So I'm curious to see where this goes, but I mean, fucking look at him. That guy is dead in the eyes. Absolutely dead in the eyes. Meta could take a $7 billion hit this year because of Trump's tough China tariffs. Kind of interesting talking about other rich people. Zuckerberg, who was a nerdy dude, then he turned into a lizard man, and now he's apparently just a fighter. He's been buddies with Trump, and kind of interesting to see, especially the FTC looking into him. Now, obviously, this is out of Trump's purview, but Apple and Meta fined by the EU, ordered to comply with tech competition rules. The fine that they got was far less than people anticipated, so it's still kind of considered a win for Apple and Meta. But the EU, we've even heard the rhetoric from Trump that he's kind of tired of all this antitrust stuff going on in the EU against U.S. companies. So I wouldn't be surprised if this is in one way or another related to the current trade deals. But obviously, we could come back to that specific story, especially when we are tearing up for their particular earnings call coming in the next couple weeks. If you haven't already, sign up for the newsletter, mattkohrs.locals.com. It is free. It's in the description of the video. My mod will drop it in chat. Once again, it's always been free, always will be free. I break down the previous week, what to look forward to in the upcoming week. I give you all the earnings. I highlight the ones I think you're going to care about the most. I give you a little cheat sheet for all the major macroeconomic events. So for example, today, Wednesday, we are going to get the Fed beige book at 2 p.m. amongst these other things. Don't forget, it was just announced yesterday that the Treasury Secretary Bissent will be speaking at 10 a.m. today. With respect to seasonality, today is seasonally a bullish day. Over the past 27 years, the better part of 3 decades, the bulls have won this day 52% of the time, so pretty much flipping a quarter. But when they do win, they win with much greater size, which obviously shows you the seasonal bias of the day. Tomorrow is a little bit more bearish, while Friday, I would say, is like, it's bullish, but just kind of leaning bullish. So feel free to check all that out, mattkohrs.locals.com. The market's going to get rocking, so I do want to give you guys some of the key levels of the day. So first of all, coming back to the daily chart of the S&P 500. So we're still within the range created on Wednesday, April the 9th. This is the day that we got the big announcement from Trump of jacking up China to 145 and everyone else down to 10% for the next 90 days. Since then, we kind of drifted up, didn't break out. Then we went down, seemingly double bottomed at 5,100, had a bit of recovery yesterday, and as of this exact moment, where are we scheduled to open? 5,421. So we are actually scheduled to open, I'm not on the right screen, all the way up here. So we have this interesting upside gap fill to 5,571, and now we have an interesting downside gap to 5,309. So there is an upside gap fill in play. There's a downside gap fill in play. In fact, there's another one that we're actually gapping over. So we used to have an upside gap fill to 5,386, but based on where we're opening, there's actually a secondary downside gap fill to 5,367, but that's obviously within this range of this deep one here. So we might as well just delete it, because I think if anything, that'll just be confusing. So yes, there's an upside gap fill on the daily chart. There's a downside gap fill on the daily chart. And today it is very, very possible we're only 60 points away of breaking out of this range. Wednesday, April the 9th. I was talking about this earlier in the week, that we're basically in no man's land between 5,400 and 4,800. There's that chance today, right there. We're opening up. This might be the day that we actually see a bit more of bullish construction in the market. Very, very exciting. I know the market just opened, so hang on. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. So clearly, I told you we have the upside gap fill, the downside gap fill. On top of that, these are the key levels. Obviously, this is the transition zone all the way down here. On top of it, bullish, below it, bearish. And then from there, we have the high, the low, and the close. So the close is within the transition zone, but you can see we opened sky high above the transition zone, which tells me the bulls are in control in the short term. And then all these yellow golden lines are the key open interest levels of the day. If the market can hold 5,400, I'll be looking to a push. There's quite a few players on the 0 DTE basis targeting 5,480 and 5,470. So obviously watch those two. And then from there, 5,500. In the event that we push 5,500, I'll find the next levels for you. But for now, you should just know there's an upside gap fill to 5,571. Now, is this all possible? Could we get up here today? The definitive answer is yes. Look out how much negative gamma there still is in the full chain. Remember, negative gamma is slippery price action, as in when we get going, we can really get going. It is not bullish. It is not bearish. It just means if it's bullish, look for it to get more bullish. If it's bearish, look for it to get more bearish. In fact, the only real positive gamma node I see is basically this reversion to the high 5,300, which is kind of like right in this zone. It's kind of the transition zone. It's kind of that downside gap fill. So if we push down here, I'd expect things to get a little bit more sticky. Yes, not only could it be support because of the gamma switch, but it could also be support just because these are key levels. But I just want to let you know, based on what we're seeing today and tomorrow and Friday, is today Wednesday? For the remainder of the week, the bulls are in control. Between yesterday and today, that short-term period, basically for the remainder of the week, we went from put dominated to call dominated. It switched that quickly. Granted, if you look at the monthlies and the quarterlies, those are still put dominated, but the next one we have to consider for that is actually the May monthlies. So right now, in the short term, there's been a clear, measurable switch from bearishness to bullishness in the short term. Now, when it starts to switch in the medium term, obviously I'll let you know, and that could happen as quickly as today, but I'm just letting you know, as of this morning, it's the shorter term, the next couple trading days that had a clear, concise pivot from bearishness to bullishness. Obviously, the golden question now is it going to have legs to keep going? So these are the levels I'll be watching throughout the day. Feel free to screenshot this. Feel free to do whatever you want. And I should let you know, obviously, why am I not logged in? Hang on, I don't want you guys to know my password. What is my password for this? Password, what is it? Nope, that was not the right one. Use another method. What is my password? I got logged out, but I did want to show you guys some of this cool stuff going on. All right, cool, got it. Shout out to Edgefield. They are the partner of today's stream. Folks, when I'm giving you all those numbers of like, oh, this percent, that percent, this is all coming from Edgefield, and you can get a free trial. It is pinned to the top of chat. It is in the description of the video. And what I'm looking for today is this fact. When you break the previous day's high, which we've already done, because obviously we gapped above the previous day's high, as of now, I could tell you that there's an 82% chance that we will be closing above yesterday's close. As in, we will be closing above 527.25. Now, on just like the initial statement of that, you might be thinking, well, how can I use it? Like, we're pretty far away. That's a perfect time to sell premium. And that's just one of their reports. But right now, I could tell you with 82% confidence, 4 out of 5, more than 4 out of 5, that we will be closing above yesterday's closing value. That is a perfect, in my opinion, a perfect opportunity to sell premium. And that's just one of the reports. So obviously I'm looking at the previous day's range. You can look at similar stats with the previous week's range. By the way, I'm looking looking at the SPY. You could do it with futures, crypto, Forex, and you could do it with a lot of individual stocks. I'm always checking out the previous day's range, the previous week's range, the gap fill opportunities. Right now, this is a news-driven gap fill. I don't like to play gap fills when it's a news prompted gap fill. You can look at seasonality, and obviously, once again, all these different reports, these are my favorite ones. They could be applied to whichever particular underlying you want to look at. I use the SPY as an example to teach you guys, but I think this is absolutely phenomenal. And my favorite thing right now is the what's in play. So when the Orbo breaks out, the first 15-minute range, the first, you can look at the initial balance, it's 60 minutes. You can switch it to the 30 minutes. These are all playable things if you're looking for more of a linear type play. So if you're thinking, hey, Matt, like I'm not really the most interested in selling premium. If that's not you, hey, I understand. These are more of the numbers you could use where you're like, okay, no, like I'm taking a linear play. And that's the type of thing that I actually directly use when I'm trading futures. Speaking of which, I haven't traded any of these accounts today. As you can tell, they are brand new. I got chopped to high heavens yesterday. It came right to the point where I got blown out, and then it went back up, and I would have been green anyway. Very, very frustrating, and it's all tilt. It's like when I start breaking my system and trading and like basically shooting from my hip. I kind of was recently looking at my trading journal. I don't think I've actually blown out from trading a system. I think every single time I blow out, it's because I go on tilt. I did do a little scalp trade right here on Take Profit just because I needed to lock in one more trading day. And today is day 5, so these are going to get converted over to performance tomorrow. So anyway, just a quick side note there. But this is actually that perfect opportunity to utilize the type of stats that you can get from Edgeful. I actually end up using quite a few of them when I'm doing my live trading because I can get the exact odds and you can customize it to see the average movement of when you break out, if you break down. My point here is if you are not trading within Edge, you're not going to be successful. I've not met a single person who's like, yeah, for years and years and years, I'm just shooting from the hip and I'm somehow net profitable. That does not exist. If you don't roughly know, and really more specifically, know the exact odds of the situation you're in, whether you're day trading, scalp trading, swing trading, you will not be successful. Of course, you could get lucky because the market is normally distributed, which is a really nerdy way of saying you're always flipping a quarter. But yes, you can have some success without knowing the odds of a situation. But you are not going to have continued success. In fact, it's only a matter of time before you completely blow out. So if you want a free way, you can get a free trial from this right now. It is pinned to the top of chat. It's in the description of the video. Try the trial. You get access to all these stats, facts, and figures, this entire console, this entire platform for an entire week. You don't have to pay anything. I highly recommend you guys check it out. And obviously throughout the trading day today, we're going to be kind of watching what's in play, at least on the SPY, to kind of just show you that real term example. With this, don't be surprised of a little morning drop here, profit taking. I mean, I could probably show you right on this. People are naturally, when you have such a big gap up, people are naturally going to take profits on their calls. So I wouldn't be freaking out on that. If anything, it's more of where do we make a base? And if I had to just arbitrarily guess of where we might be making a base today, I'd be guessing 5,400. It's a key psychological level. It's a key options level. It's a key technical level. Right now, 5,400. As I said on Monday of this week, we are on a daily swing perspective, looking at the daily bars. We're kind of in no man's land between about, whoa, something just happened. What in tarnation? What the fuck was that? Something had to get announced. Hang on. Does anyone have news on this? Fed's Waller does not comment on outlook for monetary policy. The economy is welcoming remarks for Fed listens event. No, that is definitely not it. Something just came across. What is the news? What is the news? The first person to find it wins a special cookie. Okay, we got an update from Trump. I'm suing the law firm of Perkins Coie for their egregious and unlawful acts, in particular the conduct of specific members of the firm, only to find out the judge assigned to the case is Beryl Howell and Obama appointed in. Okay, that has nothing to do with the market. Trump did just say something on True Social, but that's not it. Breaking, White House considers slashing China tariffs to de-escalate trade war, according to sources. That was posted by the Wall Street Journal. So once again, the reason for that pop right there, it was posted by the Wall Street Journal. White House considers slashing China tariffs to de-escalate trade war. Guess who fucking front ran all this shit? Everyone in that closed door, no public, no media, JP Morgan. Jesus. It's not Trump suing. Trump suing would not pop the market $4. Come on, grow up. You really think that Trump suing someone, a president, a businessman suing someone, you really, really think that is what's going to cause the market to go up? No, it's very evidently the China news, the de-escalation news, which Bissett has been saying. Obviously, he told it at that JP Morgan event. And, dude, all these fuckers front ran it. They all front ran it. So anyway, check out, show a little bit of love to Edgeflow. Like I said, it is a free trial. Use that, use the link. You have to use the link to get the free trial. Pinned to the top of chat in the description of the video. And it just gives you all the interesting breakdowns. And we're going to start to see this build out more as soon as the first 15 minutes pass. We could look at the 30-minute one, the initial balance, but those are just some of my favorites. Obviously, they have many reports right here. Like actually, it just feels like you keep scrolling and scrolling and scrolling. These are all the different statistical breakdowns that they do. And like I said, this is a free trial for all you. A free trial. You don't have to pay anything. Like I said, highly recommend you guys checking it out. Highly recommend you guys checking it out. All right, let's go back to the flow thus far this morning. Let's go back to the flow. All right. Wire to loading. Big pop on that news. And then all of a sudden, do we have some profit taking? Is that what happened? Yeah. So basically, calls bought, puts sold, and then it quickly switched. Puts bought and calls sold. So you probably had, once again, some people swinging their positions overnight that they're like, dude, this is a good time to lock in. So right now, I mean, we're barely 10 minutes into the day. I think what we're seeing right now is just a lot of people taking their money. So obviously you guys can see that I am now trading these fresh accounts, which is a very painful thing, but it's just what I have to do because I blew out, because I went completely tilted and I got far too emotional yesterday. But fortunately for me, guess what? Apex is running the best deal that they do run. It is 90% off. Generally, when I talk about Apex, it's 80% off. So like for you to take the 50K test, it's about $33. It's now even cheaper than that. You can now take the Apex test for $16, $17. The deal does not get better than this. 90% off and a one-day pass. This is tied with the best deal that they ever run. If you are interested in Apex at all, this is the time to try it out. If you've been using Apex and you want more accounts, if you are unfortunate like me and blew out, this is the best time to do it. They're doing a flash sale. It's only lasting for a day and a half. Like I said, highly recommend it. So whenever I'm trading on these accounts and you're thinking, man, I want to give it, like, is this the time to give it a shot? Yes, no, maybe. So by definition, this is the best deal they run. If you have at all considered trying the sim to funded world, this is now the cheapest offer by a mile. It's lasting for a day and a half. Obviously, to take advantage of it, use that code Goonie. It will not be auto applied. When you check out, you have to put Goonie in the coupon code. But you guys, for the better part of a year and a half now, you've been seeing me trade on Apex and other sim to funded. Right now, Apex is not just the cheapest offer, it's the cheapest offer by a mile. 90% off, one day pass. If you're using it, this is the time to load up on more. If you're curious about it and you're like, oh, I'm just waiting for the right opportunity to use it, check it out right now. Like I said, pinned to the top of chat in the description of the video, 90% off. Apex is hard to pass. It is not hard to pass. It is comically easy to pass. All you have to do is buy 2 accounts. When there's a big volatile event like market open or some big announcement, you go long one max contracts, short one max contracts. Statistically, one of them is going to pass. And right now you can do that 50-50 gamble idea because it's so financially cheap. Like it's so comically cheap that, in fact, you could do it and it's the same financial cost that it would normally be when it's 80% off, because instead of paying 33, you're paying 16. So you're getting that extra discount. So when you double up on the amount of accounts you have, you could easily do the 50-50. It's comically easy. I have an entire video on how to easily pass it, Matt, this sounds so stupid, but explain the one-day pass. It means if you hit the profit target in the first day, you pass it in that day. So for example, to pass on Take Profit Trader, you have to trade for 5 individual calendar days. Apex right now has a one-day pass. So if you hit $3,000 in profit today on the 50K account, you would pass and you'd be good to go. So are you buying 40 accounts every time you blow out? Not every time, but a lot of the times. Sometimes I want to trade it and it's like midday and I'm bored and I'll like actually trade it myself. But a lot of the times, yes, I'll buy 40. And I have done that where I'm like, oh, there's a big event. Just to be clear, you cannot do that with a performance account. If they catch you doing that with a performance account, they will not pay you out. They'll probably cancel your account, but you can do it with an eval. That 50-50 strategy It is allowed in the eval. It is not allowed in performance. I'm telling you this right now. I know people have tried to do it with performance. They do not pay you out. And in fact, they could even like just stop offering you the service. They'll just like blackball you from their particular website. So I want to be clear on that. You can only use that tactic for the eval stage. If you do it at all on the performance stage, they're not gonna let you pass. The new rule says you cannot go both long and short at the same time. I just got an email from support today, even on eval. You got it today. I have not heard that for eval. So if it's a new update as of today, like I'm specifically telling you, I know it's against the rules on PA. Don't even try it on a PA. I know people have been like legitimately banned from Apex from doing it, but I have not heard anything about it on eval. So, I mean, if that's news as of today, you might want to check it out, but I have not heard that whatsoever. And to me, it doesn't really make sense that they would do it on an eval because obviously as a company, they would want you to pay more money to go over to do like performance and whatnot. So I'm not quite, I mean, obviously they might make whatever rule, but I don't think they give a shit about it on eval. But I cannot be more explicitly clear. If you use that 50-50 long and short technique on a performance account, you're not going to get paid out. They're not going to give you the money. So if you're sitting here getting mad, like you can't get mad about it because I'm like straight up telling you that, they change the rules. They do change the rules all the time. So maybe it's currently a new rule. I haven't heard it and I haven't seen it in the email or anything. So what, Vizbot, you said that there's new rules. Where are these new rules? Because like I said, I am very well aware that you cannot do it on a performance account, but on an eval account, that's BS on the eval part. It takes take profit. You have to trade for 5 days. Yeah. I mean, each one has different rules. Take profit's 5 days. And on Apex, you could do it in 1 day. But on take profit, you could get a payout your first day. On Apex, you have to trade for 8 days. That's the trade-off. Like they all have like slightly different rules from each other. So obviously you have to trade with the rule set that you are comfortable with. I trade on multiple, and you just have to know which rules you're currently dealing with, not dealing with, that type of a thing. All right. I'm trying to trade perfectly robotic today. I have a system. I'm going to manually execute it, but I'm trying, I feel like when I go off the rails, it's because I'm not following my system. It's not that I feel that. I 100% know that. So my goal today, whether I make money or lose money, and of course it would be nice to make money, but in reality, I'm not in control of making money or losing money. I'm in control of my decision making. And ideally, if I make good decisions in the net long term, that would lead to me making more money. So what I'm attempting to do today, which is what I didn't do yesterday, is perfectly follow my trading system. Now, obviously, I could make this an auto trader, I could make this a bot, but I'm going to manually execute it based on the signals that this is giving me of like, okay, you should go long, you should go short, when to move my stops, like all that good stuff. I'm attempting to basically just be I basically want to just be the stupid monkey in between me and the system, just doing exactly what the system tells me to do. Ryan, I passed 3 yesterday doing it. I just passed 2 eval on Apex yesterday. It's BS. What do you mean? Why is it BS? As soon as you pass, you're good to go. Understanding Wiz, I don't know what you're complaining about. If you pass it yesterday, all you have to do is then do the signature thing and do the upgrade. And then you're good. But once you're on PA, you have to legit trade. So basically, it's easy for you to speed run the passing. And I think a lot of people complain about the pass, and I don't get why, because I don't think it's hard to pass because you're allowed to kind of be a degen right now. Ronnie, I used code Goonie last night to buy 3 Trade Evade accounts. That's very kind of you. I appreciate that, Ronnie. But anyway, if my trade starts to execute, obviously I'm going to show you guys. You can see where my sitting order is. I have no position quite yet, but I did want to just let you guys know that right now, this is a stupidly good deal. It's going to last for a day and a half. I will remind you guys tomorrow, but 90% off. It doesn't get better than that. It's 90% off, and it's a 1-day pass. Like I said, if you're in Apex and you want more accounts, this is the time to do it. It's just financially the best for everyone involved. And then if you're like, oh, I want to try it, then yeah, get an account right now. Your risk is $16. So if you're like, oh, like this is maybe the time for me to mess around with it, literally, this is such minimal risk. It's $16 for you to get it, set up the whole platform and start trading, learning a little bit about futures. Like this is the time. Your risk, one account, one 50K account, which is my favorite account size. Of course, trade the account size that you like the best. It's 16, 17 bucks. So if you're in the game of trading, most likely any trade you do is already risking 16 or $17. So I think it's a very, very fair offer. Which other props allow you to do this? None. That's why Apex is probably the most popular one. I'm saying the rules on eval, but it's BS rumor. Oh, okay. I see what you're saying, Wiz. Sorry. Like there's just a lot of comments coming through when I'm reading both Rumble and YouTube here. Figure out a way to kind of like push them together. This is which other problem? Yeah. So this pass rule you can't, because other ones have daily loss limit rules, while Apex just has a max loss limit. Same thing with take profit. That's why in the world of futures, take profit and Apex are my favorite. Right now, Apex has a better financial offer, which is why I'm talking about it with all of you. In the world of options, sim to funded, I like Vanquish. So those are the three I use: Apex, take profit, and Vanquish. The first two are for futures. Vanquish is for options. There's many other firms out there. I don't like many of the other firms because they have daily loss limits on top of max loss limits. And even the max loss limits are very, very small. Like, for example, on Apex and across all of these, if you're trading a 50K account, most of them are 2 or 2.5K, which is a 5% drawdown. 5% drawdown, which some of the best trading strategies in the world have 5% drawdowns. Like that's just some of the math of the game. But when you have a daily loss limit, it's a 2.5%, and technically you don't blow out the account, but you're frozen for the rest of the day, which just like they just knock you out super, super early. For me, I think it's actually really, really predatory to have that daily loss limit. So I kind of don't mess with any firms that have daily loss limit rules on top of max loss limit rules, just because by the time you run the percentages, it's so small. A 2.5% drawdown. The daily loss limit rules, I think, are, someone just said it in Dustin. I fully agree. They're complete trash, which is why I don't use any of them, because I think they're predatory. I think they know that when they put in a daily loss limit, the odds of people blowing out go up much, much higher, and then they're just taking advantage of that. So I just don't agree with it. Tradeify is best and straight to funded. I don't think it's necessarily best because I think their consistency rule is really small. It's 20%. I even think a 30% consistency rule is really small, and that's Apex's. Like I even have mathematical issues battling with that. So I don't think any of them are the best because it depends on the current offer at the time. Like right now, Apex is clearly the best, but this offer is going to go away in a day and a half. So that means another one, like whoever, like it's, I don't think you could sit there and have like
order submitted.
Oh shit. All right, we're in. We're live. All right. Just keep it calm, cool, collected, Matt. Don't do anything crazy. Don't do anything crazy. 16. What am I at? It got me a fill 2 points later. I don't like that. 220. 270. All right. This is once again coming back to the consistency rules. That's the max money I could go for today. That's not necessarily my target. Obviously, my goal is for this not to fucking happen. Are you kidding me? Really? The first day where I'm like honed in and I'm like, hey man, like I'm going to follow these rules, like just my fucking luck. Seconds later, following it absolutely perfectly. Like, dude, some days you get crazy lucky. Other days, the market gods laugh in your face. Laugh in your face. Am I going to get? No, I'm not going to get lucky. Am I going to? What's going on, right? What's happening at 9:52 in the morning that's causing the market to go absolutely haywire? Are you kidding me? Dude, I was so drilled into that. I'm like, just follow the system. And I did. You guys saw me waiting. I actually probably would have front run that entry a little bit if it were me. But the system said, wait. And this is just, maybe I'll get lucky, but this feels like I'm already getting absurdly unlucky. Absurdly unlucky. But the one little baby silver lining to this is if these accounts do get blown out today, at least I get to take advantage of the 90% off deal. Come on, save me. Save me, market gods. I'm doing the best I can. I'm trying to be disciplined. I waited for the system. I waited for the first 15 minutes to pass. PMI, no, that came out about 8 minutes ago. PMI came out all the way back here. I waited for the PMI announcement to come out. I waited for everything. I'm just trying to be systematic. I'm trying to stay disciplined, and this is how the market gods treat me. Just like that, spitting in my face. I can't even tell how often you watch a trend develop for 15 minutes and they get blown out the minute I enter. Yeah, it's uniquely painful. We're definitely in that pain together. Well, and it came. Part of me actually wants to just bail on this early because I got real close. And I could have saved myself some money. I mean, look how close that came to tagging me out 2 points away. No, dude, like seriously, the second, like someone had to drop some serious size in the, like this is going to be a painful one. Come on. Can he get lucky? It feels like I'm getting the exact opposite of lucky. Come on, step in, Bulls. Why can't there just be another crazy announcement? Yeah, tag me out.
Canceled.
Fuck me. Son of a bitch. This is so frustrating. This is just what trading is. Like the absurd frustration of attempting to do everything right and be like, nope, I'm following it. And I literally followed it perfectly to a T. I sat here. I was patient. I waited. And just my fucking luck that I entered at 9:52, 26. 26 later, I just got absolutely fucking murked. 26 seconds was it was just enough momentum for this to go long, and it just got completely destroyed. And you're going to have that. Obviously, no one knows the future, but like just like the mental toll that it takes on you, it's absolutely brutal. Trading is gambling. Life is gambling. This idea that like trading is gambling, no shit. Going to work, going to college, it's all a gamble. There's all a risk. There's all a reward. Like everything is a gamble. This idea of trading is gambling. Yeah, no shit. No shit, dude. It was top of a trend line. Yeah, trend lines are stupid. All of it was bullish. 5 minute, 10 minute, 30 minute, 4 hours bullish. 5 minute, 10 minute, 30 minute, 4 hours all bullish. Options flow bullish. And I got in right about here. And guess what happened right after? The options flow was like my options flow. The second I got in looked like that. And then literally 25 seconds later, someone dumped it. And I assume they were taking their profits. No, someone bought puts. Someone bought a good chunk of puts, and then guess what? It's going to recover too, which is the most fucking infuriating part about this. Oh, how much pain can I possibly take on this? I mean, I'm going to do the same thing. I'm going to be disciplined and use the exact same signal. I'm not going to front run it or try to do anything cute. Like if the signal fires, I'm going to take the trade. But it's just so frustrating to follow it, to do exactly what you're supposed to do, to then just get murked. I don't gamble. I lose professionally. You should wait until 10 a.m. What a pity. I don't think that's necessarily true. I think there's a lot of good lower risk entries that could happen before. I think some days it is appropriate to wait exactly till 10. But actually recently I found that if you wait till 10, you might as well wait till like 10:10 because it seems like there's something weird going on right at that turn of the hour. So I think there are some days that it calls for that for sure. But I don't think that's necessarily like the end all be all. I do agree that trading right out of the gate can be extraordinarily difficult. So days like this, if people get excited and they buy, and then generally there's opportunities where it dips. And granted, today we got news that then like really ripped it. But trading right out of the gate, I think is disadvantageous because there's just like randomness involved. Oh, am I going to take this? Dude, the range is just so high right now. Okay, so I have an option. I could trade. Do I want to pivot over to ES? I could trade ES and give myself a little bit more because these accounts are like literally on the verge of blowing out. Oh, what could I do? All right, let me think of the fastest or the most statistically reasonable way to not blow the fuck out right now. Because we are dangerously close. It's just that opening range was so wide. The pivot point, which is based on the ATR, was so far away that it just took such a fucking clock. Oh, really? Really, really, really? Yeah, ES moves much slower. And also just the dollar range of how much it's worth per movement, it is a bit calmer. So that's why I'm thinking maybe to give myself a fighting shot. But on the flip side, if I can actually catch a move on the NQ, it's going to be the most rapid way to build things back. Whatever it is, there's going to be luck involved because even with a great entry, a $500 move on ES or NQ, it can clock you. It can definitely clock you. Oh, that's so frustrating, especially because I really feel like if I, like, at some point today, we're going to be exceeding this value. It's just this fucking pullback. And that's what's so hard about these unrealized drawdowns. It's so incredibly difficult. So incredibly difficult.
Order canceled.
What the fuck was that? What the fuck just happened? Not only is the market going haywire, but the accounts just fucking ripped something weird. Ripped it. What the fuck just happened, dude? Do I have like a bot on or something right now? No fucking way. Like, you guys heard it. What the fuck was that? No fucking way. What in the world is going on with this software right now? And by software, I mean my code. TradingView went down. Literally just sitting here waiting, like you guys pointed out that percent's talking at 10, so to wait till 10, I was like, okay, cool. I'll wait. That's a good point. Market goes haywire, and out of nowhere, I mean, you guys, ding, 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 ding. What the fuck was that? This is why I fucking hate trading. Absolutely fucking abhor trading. Not just you, not just me. Wait, what happened, Matt's? Wait, what do you mean? What happened to you, Dan? What the fuck just actually happened? Markets are haywire. My TradingView Ninja cannot print candles the same speed. They watching Apex accounts, your code. It's start. Let's go. What the fuck was that, man? All right, here we have Besant talking. Let's see what this guy's going on about.
Secretary of the Treasury of the United States. As Secretary, Mr. Besant is responsible for the U.S. Treasury's wide-ranging mission to maintain a strong economy, foster economic growth, and create job opportunities for all Americans by promoting the conditions that enable prosperity at home and abroad, as well as managing the U.S. government's finances. He is also responsible for strengthening U.S. national security by combating economic threats and protecting the financial system. Mr. Besant has been in the global investment management business for 40 years, visiting 60 countries,
Apex's website
interacting
is now
with
even having
international
issues.
leaders and central bankers. He is regarded as a currency and fixed income specialist. Mr. Besant is also a frequent contributor to economic journals and business publications. Secretary Besant will deliver keynote remarks followed by an in-conversation session.
I literally can't even get on their website right now.
Who will join the Secretary on stage shortly after. Secretary Besant, the stage is yours.
Little pizzazz there.
Good, and thank you. Excuse me. Good, and thank you for that kind introduction. It's an honor to be here. In the final months of World War II, Western leaders convened the greatest economic minds of their generation. Their task? To build a new financial system. At a quiet resort high up in the mountains of New Hampshire, they laid the foundation for Pax Americana. The architects of Bretton Woods recognized that a global economy required global coordination. To encourage that coordination, they created the IMF and the World Bank. These twin institutions were born after a period of intense geopolitical and economic volatility. The purpose of the IMF and the World Bank was to better align national interests with international order, thereby bringing stability to an unstable world. In short, their purpose was to restore and preserve balance. This remains the purpose of the Bretton Woods institutions. Yet everywhere we look across the international system today, we see imbalance. The good news, it doesn't have to be this way. My goal this morning is to outline a blueprint to restore equilibrium to the global financial system and the institutions designed to uphold it. I have spent the bulk of my career from the outside looking in on financial policy circles. Now I am on the inside looking out. I am eager to work with each of you to restore order to the international system. To achieve this, however, we must first reconstruct the IMF and World Bank reconnect the IMF and the World Bank with their founding missions. The IMF and World Bank have enduring value, but mission creep has knocked these institutions off course. We must enact key reforms to ensure the Bretton Woods institutions are serving their stakeholders, not the other way around. Bringing balance back to global finance will require clear-eyed leadership from the IMF and World Bank. This morning, I will explain how they can provide that leadership to build safer, stronger, and more prosperous economies all around the world. I wish to invite my international counterparts to join us in working toward these goals. On this point, I wish to be clear. America first does not mean America alone. To the contrary, it is a call for deeper collaboration and mutual respect among trade partners. Far from stepping back, America First seeks to expand U.S. leadership in international institutions like the IMF and the World Bank. By embracing a stronger leadership role, America First seeks to restore fairness to the international economic system. Nowhere is the imbalance I mentioned earlier more obvious than in the world of trade. That's why the United States is taking action now to rebalance global commerce. For decades, successive administrations relied on faulty assumptions that our trading partners would implement policies that would drive a balanced global economy. Instead, we face the stark reality of large and persistent U.S. deficits as a result of an unfair trading system. Intentional policy choices by other countries have hollowed out America's manufacturing sector and undermined our critical supply chains, putting our national and economic security at risk. President Trump has taken strong actions to address these imbalances and the negative impacts they have on Americans. This status quo of large and persistent imbalances is not sustainable. It is not sustainable for the United States, and ultimately, it is not sustainable for other economies. Now, I know sustainability is a popular term around here, but I'm not talking about climate change or carbon footprints. I'm talking about economic and financial stability, the kind of sustainability that raises standards of living and keeps markets afloat. International financial institutions must be singularly focused on upholding this kind of sustainability if they are to succeed in their missions. In response to President Trump's tariff announcements, more than 100 countries have approached us, wanting to help rebalance global trade. These countries have responded openly and positively to the President's actions to create a more balanced international system. We are engaged in meaningful discussions and look forward to talking with others. China, in particular,
Are we actually going to get this breakout?
in particular, is in need of a rebalancing. Recent data shows the Chinese economy tilting even further away from consumption toward manufacturing. China's economic system, with growth driven by manufacturing exports, will continue to create even more serious imbalances with its trading partners if the status quo is allowed to continue. China's current economic model is built on exporting its way out of its economic troubles. It's an unsustainable model that is not only harming China, but the entire world. China needs to change. The country knows it needs to change. Everyone knows it needs to change, and we want to help it change because we need rebalancing too. China can start by moving its economy away from export overcapacity and towards supporting its own consumers and domestic demand. Such a shift would help with global rebalancing that the world desperately needs. Of course, trade is not the only factor in broader global economic imbalances. The persistent over-reliance on the United States for demand is resulting in an ever more unbalanced global economy. Some countries' policies encourage excess savings, which holds back private sector-led growth. Others keep wages artificially depressed, which also suppresses growth. These practices contribute to global dependence on U.S. demand to spur growth. They also lead to a global economy that is weaker and more vulnerable than it should be. In Europe, former ECB President Mario Draghi has identified several sources of stagnation, and he has outlined several recommendations to get the European economy back on the right track. European countries would do well to take his recommendations to heart. Europe has already taken some long overdue initial steps that I applaud. These steps create a new source of global demand and also involve Europe stepping up on the security front. I believe global economic relationships should come to reflect security partnerships. Security partners are more likely to have compatible economies structured for mutually beneficial trade. If the United States continues offering security guarantees and open markets, then our allies must step up with stronger commitments to shared defense. The initial actions from Europe on increased fiscal and defense spending are proof that the Trump administration's policies are indeed working. The Trump administration and the U.S. Treasury are committed to maintaining and expanding U.S. economic leadership in the world. This is especially true at the international financial institutions. The IMF and World Bank serve critical roles in the international system, and the Trump administration is eager to work with them so long as they can stay true to their missions. And under the status quo, they are falling short. The Bretton Woods institutions must step back from their sprawling and unfocused agendas, which have stifled their ability to deliver on their core mandates. Going forward, the Trump administration will leverage U.S. leadership and influence at these institutions and push them to accomplish their very important mandates. The United States will also demand that the management and staffs of these institutions be accountable for demonstrating real progress. I invite all of you to join us in working to refocus these institutions on their core missions. It is in our collective interest to do so. The IMF. First, we must make the IMF again. The IMF's mission is to promote international monetary cooperation, facilitate the balanced growth of international trade, encourage economic growth, and discourage harmful policies like competitive exchange rate depreciation. These are crucially important functions to support the U.S. and global economies. Instead, the IMF has suffered from mission creep. The IMF was once unwavering in its mission of promoting global monetary cooperation and financial stability. Now it devotes disproportionate time and resources to work on climate change, gender, and social issues. These issues are not the IMF's mission. And the IMF's focus in these areas is crowding out its work on critical macroeconomic issues. The IMF must be a brutal truth teller and not just to some members. Today, the IMF has been whistling past the graveyard. Its 2024 external sector report was entitled Imbalances Receding.
I can't even
this
set alerts right
Pollyannish
now.
outlook is symptomatic of an institution more dedicated to preserving the status quo than answering the hard questions. Here in the United States, we know we need to get our fiscal house in order. The last administration ran up the largest peacetime deficit in our nation's history. The current administration is committed to fixing this. We are open to critique, but we will not abide the IMF failing to critique the countries that most need it, principally surplus countries. In line with its core mandate, the IMF needs to call out countries like China that have pursued globally distorted policies and opaque currency practices for many decades. I also expect the IMF to call out unsustainable lending practices by certain creditor countries. The IMF should push more proactively official bilateral lenders to come to the table early to work with borrower countries to minimize periods of debt distress. The IMF must refocus its lending on addressing balance of payment problems, and its lending
SPY
should
starting
be
to take
temporary.
a bit of a hit here, surprisingly.
When done responsibly,
Puts and calls are
IMF
dropping.
lending is
Puts
at the
being bought,
very
calls
core
being sold.
of its contribution to the global economy. When markets fail, the IMF steps in and makes resources available. In exchange, countries implement economic reforms to resolve their balance of payments issues and support economic growth. The reforms undertaken during these programs are some of the IMF's most important contributions.
Mag 7's holding well, though. I
Sustainable
think this little
and
hit here is a little bit of a
economy.
fake out. Look how strong the Mag 7
Argentina
still is.
a fitting example.
SPY's
I
a
was
little
in
bit more
Argentina
dramatic, but if this
earlier
can
this month
bottom
to
out.
demonstrate the United States' support for the IMF efforts to help the country reset financially. Argentina deserves the IMF support because the country is making real progress toward meeting financial benchmarks, but not every country is so deserving. The IMF must hold countries accountable for implementing economic reforms, and sometimes the IMF needs to say no. The organization has no obligation to lend to countries that fail to implement reforms. Economic stability and growth should be the markers of the IMF's success, not how much money the institution lends out. World Bank. Like the IMF, the World Bank must be made fit for purpose again. The World Bank Group helps developing countries grow their economies, reduce poverty, increase private investment support, private sector job creation, and reduce dependence on foreign aid. It offers transparent and affordable long-term financing for countries to invest in their own development priorities. The bank, along with the fund, provides extensive technical support to promote debt sustainability among
Mag 7,
low-income
Delta
countries,
picking up a little here.
which empowers those countries to stand up to coercive and opaque lending terms from other creditors. These core functions of the World Bank complement the Trump administration's efforts to foster safer, stronger, and more prosperous economies in the United States and the world. But the bank like the IMF, has strayed in certain respects from its initial mission. The bank should no longer expect blank checks for vapid, buzzword-centric marketing accompanied by half-hearted commitments to reform. As the bank returns to its core mission, it must use its resources as efficiently and effectively as possible, and it must do so in ways that demonstrate tangible values for all member countries. The bank can use its resources more efficiently now by focusing on increasing energy access. Business leaders the world over identify unreliable power supply as one of the primary impediments to investment. The World Bank and African Development Bank's Joint Mission 300 initiative to expand energy access to 300 million more people in Africa is a welcome effort. But the World Bank must respond to countries' energy priorities and needs and focus on dependable technologies that can sustain economic growth rather than seek to meet distortionary climate finance targets. We applaud the recent announcement that the World Bank will seek to remove prohibitions on support for nuclear energy, which could revolutionize energy supply for many emerging markets. We encourage the bank to go further in giving countries access to all technologies that can provide affordable baseload generation. The World Bank must be tech neutral and prioritize affordability in energy investment. In most cases, this means investing in gas and other fossil fuel-based energy production. In other cases, this may mean investing in renewable energy coupled with systems to help manage the intermittency of wind and solar. The history of humanity teaches a simple lesson. Energy abundance sparks economic abundance. That's why the bank should encourage an all-of-the-above approach to energy development. Such an approach will make World Bank financing more effective, and it will reconnect the bank to its core mission of economic growth and poverty alleviation. In addition to increasing energy access, the World Bank can use its resources more effectively by starting to apply its graduation policy. This would allow the bank to focus on lending
is showing signs
to
of bottoming
poorer,
in the
less
options market.
credit-worthy countries.
Mag 7 is still coming down a little bit.
This is where World Bank support makes the biggest difference for poverty and growth. Instead, the World Bank continues to lend every year to countries that have met the criteria to graduate from World Bank borrowing. There is no justification for this continued lending. It siphons off resources from higher priorities and crowds out the development of private markets. It also disincentivizes countries' efforts to move away from dependency on the World Bank and toward job-rich, private sector-led growth. Going forward, the bank must set firm graduation timelines for countries that have long since met the graduation criteria. Treating China, the second largest country in the world, as a developing country is absurd. While it has been at the expense of many Western markets, China's rise has been rapid and impressive. If China wants to play a role in the global economy commensurate with its actual
Tesla's
importance, then the country needs to graduate up. We welcome that. The World Bank should also implement transparent procurement policies based on best value. It must help countries move away from procurement approaches that prioritize only the lowest cost bids.
Potential bottoming going on right now.
Such procurement policies reward distortive and subsidized industrial policies that undermine development. They may also stifle the private sector and incentivize corruption and collusion and result in greater long-term cost. Procurement policies based on best value are better from both an efficiency and development perspective, and their robust implementation will benefit the bank and its shareholders. Related to this subject, I wish to send a strong and I emphasize strong message about procurement policies as regards Ukraine. No one who financed or supplied the Russian war machine will be eligible for funds earmarked for Ukraine's reconstruction. No one. To conclude, I invite our allies to work with us as we rebalance the international financial system, refocus the IMF and World Bank on their founding charters. America First means we are doubling down on our engagement
bit of a pop
with the
there.
international economic system,
Bullish pop.
including at the IMF and the World Bank. A more sustainable economic system will be one that better serves the interests of the United States and all the other participants in the system. We look forward to working with all of you in this endeavor. Thank you.
All right. Can the market go now that he's done talking? No crazy surprises?
Good job. Thank you.
Keynote remark. Oh, conversation coming up. All right. We got some
Mr.
questions.
Secretary, thank you for joining us here today, and thank all of you for coming here today. I'm going to point out you have many great lines in this very meaty, comprehensive set of remarks, but you say, I wish to be clear, America First does not mean America alone. To the contrary, far from stepping back, you seek to expand U.S. leadership in international institutions.
SPY is starting to wake up,
there's a
folks.
collective
Pay
sigh of
attention.
relief across this
Mag
town
7
right
hit a
now.
new Delta
Because
high.
the concern coming into this week is that you were going to do exactly what you said you're not going to do, which
I think
is
we're
the
going to
U.S.
slowly
withdrawal.
grind
But you
up
want
and
to
then all of a
lead.
sudden
what
pop.
you're asking for is simply getting back to factory settings, right? Focused approach, and deal with the issues that you see are most paramount. Correct?
Correct. As I said in my confirmation hearings, I think U.S. engagement with the international financial and multilateral institutions, we should engage and we should be in it to win it for the American people.
In it to win it. Hell yeah,
for
brother.
The rest of the countries.
Watch for
and
SPX to
for
take
the
out
client
5460.
20 years ago, a senior U.S. Treasury official gave a speech very similar to this, calling on the IMF and said the IMF was asleep at the wheel and dealing with imbalances. Hank Paulson started the Strategic Economic Dialogue with the Chinese. Every Treasury Secretary since then have had an approach. So how will you do this differently, and how do you think that you'll proceed in this approach? What is your philosophy? What is your tools, and how will you execute on this?
Well, look, I think that our moves toward reordering the financial or trading system is a start. I think that today, as I reaffirm our engagement, but set up a list of core principles and back to basics for the institutions, and again, being from the private sector, we want to see results. And we want to see timelines that, as you and I were talking about backstage, global rebalancing has been a topic for more than 20 years.
Long time.
And it's some countries may have a 100-year perspective. We don't.
S&P 500 swinging back up.
China, obviously,
Mag
is an
7
important
new
part
Delta
of
high.
this
Not a time to be bearish,
administration's
folks.
in economic policy.
I told you,
You'll be
my
meeting
first
with
trade
your Chinese
will end up being
counterparts.
very profitable
What
if
will you
any
tell them
fucking get blown
in the
out.
sense of how they obviously are aware that there's huge imbalances. Their manufacturing capacity is enormous, especially in things like automobiles. How will you help them understand that it's not just about talking, it's about executing?
Well, look, I don't think I have to help them understand. I think they understand very well. And it's just a matter of impetus and will. So I believe I first went to Japan in 1990, 91, within 12 months of the peak of the bubble, a decade of that unwind, a decade of malaise. And then in 2012, I ran across a fellow, 2011, who was running for prime minister named Shinzo Abe, and he knew that Japan needed change and implemented it very quickly. 10 years later, more than 10 years later, Japan has had a remarkable economic run, and I think that our Chinese counterparts that will come to this realization, and if some of our policies, sometimes it takes an external push.
Right.
Alternatively, What I have said previously, there is an opportunity for a big deal here, that the U.S. is looking to rebalance to more manufacturing. The identity of that would be less consumption.
Send us
China
to the moon.
is serious on less dependence on export-led manufacturing growth and a rebalancing toward a domestic economy.
Next key level is 5470, key open interest level, key intraday high,
right now it's
basically.
really singular circulation.
I think this is an easy play, 60 to 70.
If they want to rebalance, let's do it together. This is an incredible opportunity. And I think if Bridgewater founder Ray Dalio were to write something, he could call it a beautiful rebalancing.
Indeed. But a big part of that will also be our own fiscal imbalance. And as you mentioned, we're running deficit 6% of GDP at the top of the cycle. Not sustainable, as you yourself have pointed out. How important is it to also address our fiscal imbalance as part of this larger rebalancing?
Well, it's very important that I think most people in this room are trained economists, and everyone knows that a trade deficit emanates from three
SPY right at the high delta of the day.
External trade
Mag
policies,
7 new high delta of the day.
We are intent on addressing, and the external trade policies can be tariffs, non-tariff barriers, currency manipulation, and the state subsidy of labor and means of production. Mm-hmm. So terms of trade or trade regulation
Tesla,
is one.
Delta's pumping.
Two is our budget deficit.
Palantir.
So the larger
Same
our
thing,
deficit,
Palantir's looking
the
great.
more it creates a demand suck.
MSTR,
also,
not so much.
Pushes up the interest rates. And then three, the level of the dollar. The U.S. we
NVIDIA
continue
getting
to have
a
a
decent
strong
pump as
dollar
well.
policy, and the dollar will adjust based on markets. Everyone asks me, well, what does a strong dollar mean? And to me, the strong dollar means having the policies in place to deserve capital flows and have confidence. But it doesn't mean that the price on the Bloomberg screen every day. And it also has different meanings in terms of bilateral the prices. So it's really three-pronged. But Tim, to your question, I have talked about we did not get here
60 to 70,
quickly,
pretty easy play.
With the
Decent
spending,
risk.
The U.S. does not have a revenue problem.
That was a nice
We
breakout trade at 1023.
And I have suggested, when I first met President Trump, to talk about joining his campaign 2 years ago, that we need to get back to a long-term sustainable budget deficit of something with a 3 in front of it, which works. We have 2% nominal growth or 2% inflation, projected 1.8% growth, which I think could be much higher if we implement our economic policies.
Now, you reaffirm the strong dollar policy first articulated by Bob Rubin. Valerie Giscard d'Estaing in the 1960s talked about the U.S. exorbitant privilege of the dollar. There are some in this town who question that privilege and actually see it as a burden. Do you see it as a privilege?
That the U.S. sits at the center of the global economy is enabled by the use of dollars, and that it's natural that the usage would come down over time. And I think that the U.S. will always, for my lifetime, be the reserve currency. I actually am not sure that anyone else
93,
wants it.
Tesla up 7%.
I can't remember. One of the European officials
Palantir
said today,
up 8.8.
Maybe it was Mr. De Guindos, I can't remember, said, oh, well, the euro
NVIDIA up 5.5, Meta
currency.
up 6, Broadcom up 6,
we just had a substantial
Microsoft up
appreciation
3.4,
for export
Apple
economies.
up 3.7.
It's a lot of pressure.
Rum's up 7 as well.
I think that
we got some gainers today.
Reaffirming our belief in these international institutions is also part of that.
You mentioned the euro. You mentioned in your comments Mario Draghi's report from last year. There was the letter report. Before that, I've been spending a lot of time in Europe. There does seem to be a much more a buoyant atmosphere. In
New
Europe.
intraday high. I told you on the NASDAQ that trade would have played if I had better buffer.
Renaissance. I was
Fucking
heckled a bit,
painful.
but I actually am pretty positive on Europe.
Would have paid.
Do you think this is an opportunity to shift some of that demand? The world has relied on U.S. final demand to shift some of that demand for Europe. Is this a positive time for Europe?
Look, I think it can.
If you're
be.
in the Discord,
And
Piper just fired.
It wasn't in a straight line. It wasn't always the way a trained diplomat would have done. But I think we should all congratulate President Trump. He has done what a succession of European leaders have tried to do for the past 26 years, since the advent of the euro, that whether it's the French, the Italians, other European countries have tried to get Germany to increase their fiscal spend and drive the European economy. And that I applaud these nascent efforts because it's a combination. It's a combination of economic stimulus, and it is a combination of burden sharing on the European continent for defense. And as I've said many times before, economic security is national security is economic security. So if this European plan works, that I applaud it. I had a private meeting with the Spanish finance minister last
Tesla's
week,
just
2 weeks
going
ago.
246 to 256,
$10
just like that.
Pleasantly surprised with where we go on military spending, and that this 2% number today, he was right.
Yeah. So you're already taking on these tasks. You have China, more consumption, less investment, deal with their manufacturing excess capacity. Europe's a great opportunity. The U.S. rebalancing here, including on fiscal. So what do you want the IMF to do? What would you like to hear from Kristalina over the next couple of days, or the board, in the new direction? Again, back to factory settings direction. What do you want to hear?
This
from
is
them?
so frustrating. Knowing my trade was good.
I think it's
I was
just
in at
mission
9:51,
and,
got dumped on, knocked out,
occasionally you have to
and it
trim your
would have
garden when the
been
weeds
nice,
grow.
dude. Fuck
And
this. The buffer is such a pain in the ass.
It's back
I know,
to basics.
size
what are
down.
our priorities?
I know,
and how
I know,
are we
I
going
know,
to
I
judge
know.
success?
I know.
And
This
the
is
World Bank
frustrating.
discussed about graduating the medium-sized countries that should have graduated some time ago. That changes the commercial model of the World Bank, but obviously you think that's important, that they need to be graduated.
Yes. Yeah. I mean, it's just, as President Trump says, it's common sense that that you can't have the second largest economy in the world. And it's as I said in my speech, I applaud their rapid growth, but you don't get both. There is, I have a teenager who sometimes wants to be treated like a child, sometimes wants to be treated like an adult. And
I got one of those too.
Yeah. And it's an adult economy.
You mentioned energy, specifically nuclear.
SPY's about to hit new intraday high, going right for the exact level I told you. Be careful. There's quite a bit of open interest right in this 10-point zone.
About 13 million barrels of oil a day, the largest producer in the world. What more do we need to do here, and how can the World Bank, what do they need to do more to encourage fossil fuels as well as nuclear, and I assume all the above?
Yeah. Look, the sine qua non for economic growth is energy abundance. And we need to drive the right combination of the crawl, walk, run for these countries in terms of sustainable production. But by sustainable, I mean robust and baseload, not some what I would call almost a luxury belief that we have in the West. Like they are worried about pumping water. They are worried about heating their homes, running their hospitals, and we've seen that the intermittency doesn't work. Even kind of in middle developed countries.
81, 82 is this breakout.
Maybe
That's
like
the
South
highest we
Africa
saw on that
seems
Trump
to
day.
have rolling blackouts.
Right.
So that's not
Right
a model.
up here.
We want to have a model of strong baseload and then bolting on the alternative production, as opposed to beginning with
Palantir
alternative
is fucking
production
going,
and
dude.
then having this
Vol's getting
latency or
crushed.
intermittency that makes it impossible to industrialize.
In the final minute or two, let me just turn to financial intermediation. There's a famous adage that capitalism without capital is just another ism. The institutions you see here are important intermediaries, both in the capital markets and in other forms of financial intermediation. What is your vision, especially for the U.S., in terms of financial regulation? What do you want the industry to look like? Obviously, the capital markets of the U.S. is the crown jewel of this economy. How should we encourage that not only here, but abroad?
Well, I think that I've been getting a lot of questions on private credit, and I think that private credit is an interesting addition to the U.S. mosaic, and it is the depth and breadth of our capital and credit markets that powers the U.S. economy, and it's the innovation there. I think that private credit's a very new and interesting part, but it is happening outside of the regulated ecosystem.
Right.
And I always like to say, I'm not an economist, I'm an economic historian, and I think that is a distortion of the system, and it tells me that the post-2008
Mag 7 coming off the Delta high.
corset is
S&P
too tight
500, same
on the
thing. New
regulated
Delta high taking a bit of a
institutions,
breather.
and we want to
Maybe a gear up
deregulate them
base
or
here
make them
to
more
push
able
up
to
here.
provide the opportunity to lend to the American economy and perhaps into the international economy in a smart, safe, and sound way. As we've seen, the history of financial crises is a overreaction on one side, and I think that we had a regulatory overreaction. I convened something in the U.S. called FSOC, the Financial Stability Oversight Council, which convenes the regulators, and I think through partnership with the 3 U.S. banking regulators, Federal Reserve, Controller of the Currency, and the FDIC, we can come up with a system that makes the regulated financial system prosper again. And what the U.S. has that is different than most other G7 countries is just the number of financial institutions. We don't have 5 big banks, 3 big banks. And in the U.S., the community and small banks, which are provide 70% of agricultural lending,
right.
40% of small business lending, 40% of real estate lending. And in the U.S., we've had this incredible boom on Wall Street. I think Wall Street can continue doing well. But I think it's Main Street's turn to share in the prosperity. And I think it was the pullback by the small banks, the post the GFC, that's kind of created this stagnation on Main Street, and we're determined to fix that.
Mr. Secretary, I always say Treasury is the sober voice of reason. What we've heard today from you is a sober voice of reason. We wish you all the best. Ladies and gentlemen, a round of applause for Treasury Secretary.
Thank you.
All right. That's all she wrote today, folks. That is all she wrote. I'm attempting to get some of these Apex accounts right now, and I guess so many of you are trying to get them that the website is having a little bit of a struggle. Anyway, kind of when we were anticipating his talk, we had a little bit of a pump, a bigger dump, and then when he got done with his talk, we kind of settled, and in the Q&A, we pumped. We're taking a little bit of a breather right now. We are running into a very evident open interest level. There's quite a few calls between 54.70 and 54.80. That's going to serve as naturally as resistance because the delta is going to climb from whatever value they got them at all the way up to 50. A lot of people like to take their profits off the table when the delta hits 50. So you naturally see profit taking. So you're going to see this phenomena where you get to these key levels and then the players playing those, surprise, surprise, calls getting sold, locking in those profits. And then you have some mean reversion traders coming in, buying puts. So the blue line's dropping, that is puts being purchased. The call line dropping, that means calls are being sold. Both of those have the net impact of dropping delta. When delta drops, obviously that's a bit more bearish. And the reason it's bearish is because of the influence it has on the market makers to hedge their book. It basically means they either need to sell their longs, get into shorts, or the combo of the two, selling longs and getting into shorts. And that's exactly what we're seeing. So that's why we are reacting to these levels. And it's also why we mark them out every single day, because we get the idea of the reaction. Basically rejected, lower high, sell off, finding support at intraday support. We run right back up, surprise, surprise, key level. What I'm hoping we have here is a rejection, higher low, and then a push through. It could be an inverse, I don't know, shoulder, head, shoulder. It could be a cup and handle, whatever you want to call it. It's like all these technicals, it's more of an art than a science. But what the real game is the math game of, okay, like how are market makers going to react to the incoming flow? So it's always that dance between the two. The incoming trades and how the incoming trades are going to impact the market makers. So that's why we're always watching the incoming trades and then paying attention to how the market makers obviously decide to hedge out their book to said incoming trades. Hang on one second. Let me update this really quick. Dude, it is taking up. Is anyone else having issues on Apex right now? Like, I think there's so many people signing up, probably all you hooligans, that the website's just moving at a snail's pace. Anyway, the Qs did make a new intraday high. It did break out of actually the first hour range from obviously 9:30 to 10:30. We did make a new fresh high, which coming back to Edgeful, I am looking at the SPY. But if you were to look at the what's in play on the Qs, obviously that is here. I'll show you stock QQQ. Obviously, we got the initial balance break to the upside. So that is that first hour, 9:30 to 10:30. So we got that breakout. The SPY, not so much, because we did make this weird high at 10. Like there was that quick little thing where my like whole system went funky and you guys heard it. It was like boom, boom. Just a lot of, I don't know. I'm going to have to look into that after stream. But anyway, we are closer to the highs than we are to the lows. We are seeing SPX ideally not only make a higher low in price right here, but hopefully it's a higher low in delta as well. I do want to point out that the 0DT is pretty confused. It's more sideways, while the all expiration put together, we're seeing more bets being made on a longer duration scale, but clearly that trend line would be to the upside if you were looking at just the all expiration delta. And it's a combo of people generally getting out of puts and getting into calls, generally selling puts and buying calls. So we're seeing that positive flow in delta, which once again has a positive impact on the market because of what it means the market makers have to do. And then the Mag 7's even stronger. Even the pullbacks that we've seen, it's not like even this, like it's pretty much flat. Like when the S&P 500 gets a pullback, the Mag 7's holding strong, which is generally in my book an overall expression of strength, at least in that time frame. And in that time frame specifically, I'm talking about obviously today's trading action. So this could change. I mean, yesterday we saw it completely change at noon or something like that. Like, yeah, this stuff can change because we're in such a news-driven environment. But as of now, a snapshot of the current data, it'd be foolish to be a short-term bear. Like, and when I'm talking short-term, I'm talking right now. If you're like, hey, like at this exact moment, should I be bullish or bearish? Obviously, the odds are going to be favoring the bulls because everything is favoring the bulls. 5 minute, 10 minute, 30 minute, 4 hour, all bullish. 5 minute, 10 minute, 30 minute, 4 hour, all bullish. When I say they're all bullish, they're all above their EMAs. Momentum is to the upside. Looking at price action, we have higher highs, we have higher lows. Okay, price structure is bullish. And looking at the flow, obviously the linear regression, if we were to take a trend line of this, clearly pointing to the upside. So, I mean, if you want to fade it, have at it. You're just taking the statistically lower opportunity. Now, just because something is statistically lower, no, it can happen because once again, as I am freely admitting, we are in a heavy news-driven environment. A random tweet, a random update could send this all the way down. It could also send it sky high. If I'm being completely honest, it's environments like this that I just absolutely abhor because it feels like we're not trading. It feels like we're not reading the price structure, the price momentum, the technical, the options flow, the fundamentals of the company, doing an earnings breakdown. It feels like we're just in a crapshoot of are you on the right side of a random news announcement? So before, when some of you were saying like it's gambling, I would actually say right now this environment is more akin to gambling than it was like a month or two ago, just because it's so news driven. I mean, the fact we're up so much today, 3.3% in the SPY, 4.1% in the Qs, is all because of a random announcement that we got at last night at 5 o'clock, 6 o'clock, something like that. Just a random update from Trump, like, nope, I have no plans on firing Powell. And the market ripped multiple percent, which means trillions of dollars was added to the overall economy. That one random news update added trillions of dollars to the bottom line, the total net worth of the economy, which, I mean, if that doesn't express the current environment that we're in, I don't know what will. So it's luck. It's how lucky do you feel? Do you think you're going to be on the right side of the announcement? Do you think you're going to be on the wrong side of the announcement? It's the times that if you're smart and not a degenerate, you're just not playing. And it's the times that if you are a degenerate and you want to play, you have to be humble enough to play small. And you also have to like really pay attention to risk, because if it goes against you, and we all get into those mindsets of like, no way could it keep going. No, in this environment, it can very much keep going. It can very much keep going. It is absolutely wild, But right now, the Bulls are in control. And actually, I could do as of yesterday, the Bears were in control on pretty much every single time frame. Like every individual expiration day in the overall market was put dominated, but we did see that switch up. So as of this morning, today, the 23rd, call dominated, the 24th, call dominated, 25th, call dominated, 28th, call dominated, 29th, call dominated. The 30th is the first day that is put dominated. So pretty much until the end of this month, this calendar month, we are call dominated, excluding the 30th. Going over to May 1st, 2nd, 5th, 6th, 7th, 8th, 9th, 12th, 13th, 14th, 15th, 15th. So basically, all the way up till the 15th, all call dominated. That was the switch from yesterday to today. That was a clear pivot in the market. Yesterday, a mere 24 hours ago, I could not say that. In fact, I would say the exact opposite. I mean, quantifiably, every other one was put dominated. But at some point between yesterday market open and this exact moment, well, really market open today, all those individual strike dates, expiration dates I just gave you for the overall market went from being put dominated to call dominated. Now, that is all shorter term stuff. That's the PM structure, which is not really where institutional money plays. Institutional money commonly is looking at the monthlies and the quarterlies, all those like morning, like the major monthly expirations that we talk about. Those are still put dominated. The closest one is going to be the month of May. So it'll be May like 16th or whatever. But the May monthly as of now is still put dominated. But I'm curious like how close it is, because it was put dominated. From yesterday to today, it became less put dominated. So I'm wondering when we like kind of tilt, like if it's going to actually tilt to be neutral and then maybe even go call dominated. So that's kind of what I'm paying attention to. Obviously, we're going to be getting those updates throughout the day, and I'll just keep kind of checking in to see what the general flow is. But as of right now, I should let you guys know that we are not seeing... In the days that we have those nice big trends, it's because the average call strike throughout the day is getting more aggressive, as in higher, and so is the average put strike being played. There are various services that tell you in the past, whatever, X amount of time, what is the average strike being played on the 0DTE volume. And right now we're getting more of a consolidation. The average put strike being played is moving up, and the average call strike being played is moving down. So the way price, it kind of looks like it's consolidating. We're actually seeing that in the average strike being played over the past, whatever, since market open till now. How is BTC MSTR looking? It's good. I mean, Bitcoin right now is holding 93. Technically, it's down 0.5% on the day, but it's over the past week very much been outperforming. It's kind of crazy to say, but Bitcoin is not that far away from an all-time high. Like, just based on the numbers of the situation, like feasibly in the month of May, we might be talking about Bitcoin at a new all-time high. Like, that's how close it is. And what's funny is, well, not funny, what's I would say interesting is since the start of April, we've seen Bitcoin decoupling, as in losing its correlation to the NASDAQ 100. And if anything, it's gaining a correlation to gold. But if anything, is kind of like in the middle. It's almost behaving like, yes, it has some correlation to gold, has some correlation to the overall market, but it's not really strongly correlated or inversely correlated with anything at the moment. And that's obviously a measurable thing that people do day in and day out. And for quite a while, it had a very strong correlation with the NASDAQ 100. So that's weakening, and it's kind of at this point just like driving its own path. MSTR is obviously going to be highly correlated to Bitcoin itself, because what is Strategy? Ticker symbol MSTR, the company formerly known as MicroStrategy, now known as Strategy. Obviously, billions of dollars of that company's worth is literally just the Bitcoin on its balance sheet. In fact, I think it's like sub 10% of the company is actually the company. Like most of it is literally just the Bitcoin on the balance sheet. I think people forget that MicroStrategy is also like a legit software company. It's just in no way behaving like that, obviously. But yeah, it's going to do well. Like it's not going to deviate that much from Bitcoin. It can't. If it did, it would just be arbitraged away. It doesn't really make sense that it would be trading dramatically different. I should make it clear, if you do like Bitcoin, you should get Bitcoin or IBIT. I wouldn't do something like MicroStrategy just because there are other business things to consider, and basically all the weird Bitcoin treasury, as Michael Saylor puts it, like that type of stuff could create other business friction. So if you are a crypto fan, I don't see the point in getting Strategy. I really don't, because not only do you have Bitcoin available to you, which is not hard to get, you have IBIT available to you. So if you're like, I don't have a crypto account, I want something on the equities market. Okay, you have IBIT, which is a 1-to-1 comparison. And then if you're like, well, no, I like the like leverage of maybe potentially playing in equity or Strategy itself. Well, there's perp futures. So like, I don't think there's like, I don't get why people who are Bitcoin crypto, but really specifically Bitcoin enthusiasts are picking Strategy, because across the board, Bitcoin, it's better to control it yourself. If you need an ETF, there's IBIT, and that has options. And then if you're like, no, a person I want leverage, well, okay, you could trade options on IBIT. And then also there's perp futures, so you could get an exorbitant amount of leverage. So I don't quite understand that argument, if I'm being completely honest, of why people who are big supporters are getting it. But I guess that's just me. Breaking news on CNBC. There's always breaking news on CNBC. What do you think about Mara? Another one that I just don't get. If you're a supporter, actually, I get MicroStrategy more than I get Mara. Like, if you like crypto, go get crypto. Why would you go get a company that has inter-business competition, like potential issues? Mara is a Bitcoin miner. So yes, there is a theoretical world in which crypto takes off, but because the business is potentially poorly run, as a crypto miner, it ends up not doing well. So like in that world, I like Strategy way more than I like Mara. I don't get why people go for crypto miners. Like, you would have to specifically like that crypto mining business because you think that they are running a crypto mining business better than others are. But if you're like, no, I like it because I like crypto, go get fucking crypto. Obviously, that's the top tier answer. And even there, a Strategy would be better. I don't know why people are seemingly always getting duped into getting these miners. And like I said, you can get the miner if you're like, no. I think this is a mining business that is run better than other mining business. But beyond that, that would be the only reason. Like, that would be the only reason. And a real world example of how quickly that could go awry. Look at gold miners. Gold's at an all-time high, but some gold miners are literally like, I just read a story about one actually like filing for bankruptcy. So like, riddle me that. You have a mining company of the thing, a commodity that's heading a new all-time high, and yet some of these miners are actually declaring bankruptcy. So there's a lot more risk with these things that are mining it, whether it's physical gold or these cryptos. And like, so like, just be very, very careful. But it is a very silly, rudimentary argument that you're like, I got the miner because I like what they're mining, like the underlying, whether gold or Bitcoin. If you like the underlying, go get the underlying. Have you heard of Quebec's crypto ticks? No, it sounds like another scam. But Mara is holding lots of Bitcoin as well, proportionately not as much as Strategy. And once again, that one actually has a lot more of a business risk than something like Strategy would, just because of the percentage of the business made up by the business rather than Bitcoin. It's like, if you like Mara because of how much Bitcoin they're holding, I don't know if like this is a game for you because you just haven't done research on the overall situation. Like, there are far, far better answers. If you like Bitcoin, go get Bitcoin. If you really like Bitcoin and you have that gut feeling that something's about to happen, great, go play it in a leveraged manner. And if for some reason you're just married to strategy, okay, like whatever, there's better options, but if you like it, you like it. Maybe you could argue that it has a more liquid options market than something like iBit, but even that's kind of a weak argument. But by the time you get into the weeds of, no, I like Bitcoin, so I'm in stupid things like Mara or Hut or anything like that, what the fuck are you doing? Like, what in the world are you possibly doing? You gotta think about it. That's just, you're taking on so much outsized risk that, like, it's just, I gotta appreciate it. The reason to do Mara is for the options. No, it's not, because strategy has better options. iBit has better options. Mara, what do you mean it doesn't have good options? That's not a reason. The reason to do Mara is for options. No, I mean, right away, strategy is better. Strategy and iBit, they have a more liquid options market. They have more participation, more open interest, more strategy has much more of an underlying movement. There's options on leverage Bitcoin ETFs. No. You got to be careful with Coin, because Coin, like Mara, has other business influences beyond just like Coin. Remember, it's a crypto exchange. So the equivalent would be looking at the NASDAQ, which is a publicly traded company. Just because the market's going up or down doesn't necessarily mean the exchange is going up or down. They're not necessarily correlated. So the argument is that if it goes up, there's FOMO, so people trade more, so the number should be better. But Coin, you're starting to get actually pretty far away from like just it going up or down. Like, I don't know how to make this more clear. People who are saying, yeah, Mara is for options. No, like, crack open a book. If like Coin, you're getting, if it's not hard. If you like Bitcoin, go get Bitcoin. If you want leverage Bitcoin, well, look at options on something like iBit, which is directly correlated, like it is exclusively Bitcoin, or go play perp futures. But this idea of trying to play random ass things like Coinbase or Mara or Hut or things that are like awkwardly tangentially related to crypto, it's silly. It's absolutely silly. Mara's over 20% shorted. Is that true? Let me log in. I'll double check that. Let me log in. Mara, what is the short interest on Mara? It might be. I don't know. I don't know the last time I even checked it, so I can't even guess what it would be. Yeah, I'm actually seeing 27% short interest on Mara. But once again, that is the best metaphor I could have for that is just because ever since GameStop and AMC, people think that something with high short interest, it has to go up. It doesn't have to do shit. It doesn't have to do anything. Having high short interest is just having gasoline. It really, like, that's the best, I guess, metaphor I could come up with. It's just having gasoline, but if there's no match, if there's no interest, and there's really not much interest right now in Mara. When I say interest, I mean like literally the amount of shares traded per day, the amount of people talking about it. It has low social and low institutional interest. There's much more trading going on with Coinbase. There's much more trading going on with MicroStrategy. Both of those greatly eclipse how much Mara is traded in the dollar value, not only in the equities market, but also in the options market. So the chance, like, for you to have a short squeeze, if that's the idea, not only do you have to have high short interest, you have to have, what the fuck is going on right now? What was just announced at 11 that's causing things to go haywire? Something's getting announced. What's the breaking news? Trump, the EU and China are ripping the US off. So a bit of a drop, a bit of a pop, now a bit of a drop. I guess Trump is speaking. Is it a live stream? Or is he just doing some sort of conference and it's getting reported? But anyway, things are going haywire right now. I guess the quote from President Trump is, the EU and China are ripping the US off. All right, Nico, guess what? You could go fuck yourself. Congrats who just got banned. Oh, sucks to be Nico. Sucks to be Nico. The crazy thing about banning people is it's kind of permanent. We actually haven't found a way when we ban people from chat to like undo it. And we've obviously looked into it, but it's kind of a permanent decision. He is talking. Imagine how stupid you must feel to be Nico right now. I'm looking. Should I just search White House? White House. I'm not seeing anything live there. Does anyone have any idea of where it is? Matt, would you get TLTW? No, I wouldn't. If you like bonds, just get TLT. Once again, if you like bonds, just get TLT, because of the way TLTW is constructed, it's every single dividend payment, it is just getting hit. So like what I'm arguing is look at whatever time period you look at, compare TLT to TLTW, look at that percentage difference. TLT will be outperforming it. And then even if you consider the dividend payments, it's still outperforming it. I did a decent amount of research into that to see like I was interested in the way, Trump just ends reports to reporters. Okay, so I guess he is done talking. And we got a little bit of craziness from him there, but nothing that was sustained. But yeah, the last one was that he's done. JDG, it says 25K for one. How much real money do we make? Dude, just go read it. Like your mind is being blown. I see all of your comments right now about Sim Funded. Just go read their FAQ. It's not rocket surgery, dude. It's SIM funded. There are so many videos on it. I have so many videos on it. They have an entire FAQ. You're just spamming chat here, man. Just go. It's not a hard concept. You pay to take a test. You take the test. If you do well on the test, then they're going to fund an account. If you do well with that, you can get a payout. But it's not easy. It's still trading. But I don't know what you're not understanding, man. Yeah, you pay money to take the test, dude. It's not rocket surgery. You take money to pass the test. If you pass the test, then you upgrade it from eval to PA. When you're trading it on PA, if you do well, you can request payouts. And if you blow out your account, you have to restart. What is your real... Dude, I have you're miles behind. I have entire series of videos explaining this stuff. Entire series of videos explaining exactly how this works, what it is. You just got to do 5 seconds of research. Not only could you watch it on my channel, but there's an entire FAQ here, right here, of what it works. You could get the TLDR right here. You could get the specifics of an account right here. It's just, if I pass the test, do I get college credit? I think so. What about the payout? How you get paid out on 147? Dude, Mike, actually, never mind. I don't necessarily think this is for you. Actually, just scratch it. Just scratch it. Don't do it. Don't take the test. I have a funny feeling that it's going to be a waste of money for you. As much as other people will take advantage of it, I have a very, very sneaky suspicion that this is not necessarily a service that you should be taking advantage of. So never mind. Scratch the whole thing. Everyone else, you understand what's going on. Mike, nah. Never mind. Not every product, not every service is meant for every other person. And this is an example of that. So it's cool. It's cool. Don't worry about it. You'll be good. You'll be good. Just don't. You should focus more on Edgeful. Check that out. While everyone else, it's cool. Where do babies come from? Big birds, pterodactyls, I think. Jesus fucking Christ. It's not everything is for everyone. 5 minute, 10 minute, 30 minute, all bullish. 5 minute did bounce off the bottom of its EMA cloud. 5 minute, 10 minute, 30 minute, 4 hour. All momentum time frames are bullish. Let's go back to the look at the flow. Mag 7 hit a new high. That's definitely bullish. S&P 500 selling off, potentially bouncing here. As soon as this starts to gain a little bit of life, ideally that's what would lead us back up to our third, fourth test of this open interest level. So looking for this to kind of break above 50, 51. I would love to see that recapture. Technically, we would still have higher lows and we'd be like good to go. So Apex business model is to get a shit ton of people to pay fees. What percentage of people that take the test pass and what percent? I think it's 50% pass, maybe it's like 47 or something like that. That is in their disclosure. And then in terms of what people get paid out, very minimal. I would expect it's below 5 or 3, but think about it. 95% of traders, we know from the exchanges who are trading on the market when we hear from their earnings that 95% of traders lose money anyway. So their business model is this, hey, instead of funding your own account, we know statistically that people are horrible traders. So instead of all the money going to the other traders and exchanges for the commissions and the bad trades, they keep that money. That's their business model. And then for the people who are successful, they'll pay them out. That's the business model. I know that many of these sim funding companies are like, oh, we're here to like make good traders even better and we want to partner with good traders. No, they've read, as we all know, that retail traders suck at trading. So they heard that stat and they said, okay, if retail traders suck at trading, how can we possibly make money off of it? So instead of your money going to a brokerage or exchange or the other people taking the other side of your trade, they get to keep it all. And then for those small percentage of people who are successful, they just pay you out anyway. It's kind of an ingenious plan. It really, really is. And if you do well, you do get paid out. Year to date, I've been paid out $200,000. And then that particular grouping of, I guess, accounts that I had, I was paid out $240 in general from all of those 20 accounts. So I was paid out just under $250,000 and 200,000 of it was the year to date payout. How much real money do you make? Dude, Mike, holy fuck, man. What are you not understanding? If you trade well, you can request that money out. If you don't trade well, you blow out and the company keeps your test fee. Like, Matt lost 200K like 2 weeks ago and 220K yesterday. And how much lose today? Am I dumb? Yes, Mike, you are dumb. For some weird reason, you are the only person, like there's between YouTube and Rumble right now, there are thousands of people watching this. And for some reason, like statistically, this is rare. You are in that like sub 1% who is not understanding what's going on. Oh my fucking God. Request with the 25. Holy shit, dude. This guy. Mike, don't do it. Do not do it. Everyone else, if this sounds cool to you, try it out. But Mike, I promise you, this is not a service for you. I absolutely promise you, you will just be losing money and you are not going to be successful here. It's just, I'm trying to save you money. The money, what's it, $17 for a test right now? Take that $17 and buy a homeless person a sandwich for lunch today. This money is clearly for you. Better somewhere else, like clearly better somewhere else. Like you're not going to be successful here. I'm being honest. I'm trying to save you money. Don't break out the credit card. Don't click on the link. Don't do it. Just absolutely don't do it. Holy shit, man. It's like fucking talking to a goddamn wall right now. And I've talked to walls. I've talked to many, many walls. Holy fuck, dude. But I make money on my real account. I highly doubt it. I bet you have made money. I would bet my life savings that you are not net profitable. Matt, with all the accounts that you go through, have you checked your rewards tab? You may have enough credits for free raid sets and accounts. Yeah, sometimes I use them when I have them. Those are nice. That adds up. It mitigates the pain a little bit. It does. It mitigates the pain, but overall, we're still kind of range bound. We got this pop today, and we're now just kind of at the bottom of this range, like wick. The Qs tried to break out here at 10:35. This was when Besant was kind of ending his Q&A, and then when he did end it, the market just kind of returned. We just have this clear equilibrium at 461. We have this equilibrium at 545, or 543, excuse me. Tesla's really pushing. Palantir's having a great day. It's up 9%. Nvidia's having a solid day, up 5.3. RUM's having a solid day, up 7%. Meta's up 5.6. Intraday kind of trending down, but a nice gap up. Broadcom looks like it actually wants to go here. You have Microsoft up 3.3. You have Apple up 3.4. Intraday, Palantir and Tesla are kind of two of the only ones that are intraday actually pushing, while most other stuff has gapped up and we're just holding it. So like the intraday movement's not really there, but the difference from close to open today and a little bit of a push is why most equities are very, very, very green. Very, very green. So we're just kind of waiting now. I mean, I really thought we were going to get going here at 10:35. I did, but for whatever reason, people within the options market on the SPX decided to start buying puts. Now, were they buying puts to open a position or close a position? I don't know. That's like, your guess is as good as mine, because people who sold puts to put in a floor for us, as they might be buying them back now to lock in those gains. So this could be actually a little bit more profit taking. Of course, it also could be the creation of a position and they actually think the market's going to go down, but we are also clearly seeing some profit taking on the calls. Now, a different story is the Mag 7, which is absurdly strong. Even though we're getting a little bit of a pullback right now, people playing the Mag 7, the combo of Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla, do not give a shit. They are buying calls for this Friday. They're buying calls for farther out. We are seeing some clear aggression, lots of call buying, and puts are slowly being sold, but really no one's touching puts. That's a lot of strength in the Mag 7. Obviously, I'm not necessarily pitching it as a zero DT because we are seeing the action further out than this Friday. That's the difference between these two lines. But regardless, it is bullishness. So there's some bullishness for this Friday, but there's more bullishness for farther down the line in terms of expiration. And no surprise, I mean, Tesla's pushing Palantir, and that's probably why we have the Qs intraday outperforming the SPYs, because there's so much excitement in the Mag 7. But what I would be looking for is if this can actually successfully base, as in the delta movement on the SPY, and start to take out some of these recent highs that we saw at 1105, 1045. If the delta can start to push that, I would then be looking for SPX to break out. Well, first test this zone between 54880 and 5470. So kind of breaking through 75. And then from there, obviously, we have the very important test of 5,500. That's what I'd be looking for. If, and it's a big if the delta can actually push around, because right now we do see the calls being, or excuse me, no one's touching calls. If anything, they're taking some of their profits, and more so right now we're seeing this delta bleed off because of puts being purchased. So you kind of have to just wait for that one to play out. Just kind of have to wait for that to play out. But right now, overall, I mean, if you look at something like the 10-minute, we're effectively just range bound. We're not really trending either way. So, and that's just for the overall market. Obviously, Palantir's trending up. Obviously, you have Tesla trending up. We are seeing some decent trends. It's just right now, in terms of the overall market, it is indecisive of what the hell it wants to do. DJT's up, yeah. Crypto's up. DJT is becoming much more related. Not exactly like strategy, but it's more of like a Mara thing, where it's like directly tied to what's like crypto happenings, if you will. So the fact that crypto's up, and we see more and more deals between Trump media being struck with various crypto players and various crypto ventures. If crypto's going up, there's a good chance that also you're going to see DJT going up as well. Hey, do you know if you have an activation fee discount too on Apex? No, it's just for the initial test. At least this one is. I've never heard of them doing it. I'm not saying that they won't in the future for the activation fee, but I just, in the time that I've been using it, that hasn't been happening. But who knows? Maybe that's going to be another thing that they're interested in the future. All right, folks, that's pretty much it. So like I said, for everyone excluding Mike, I think you understand what's going on here. It's basically you against the house. And if you think you're a better trader, well, then the house will pay you off. And this is, like I said, tied with their best deal, 90% off. And on top of that, it's a 1-day pass. So check that out. Also show Edgeful a little bit of love. They're both pinned to the top of chat. They're both in the description of the video. 90% off with the code Goonie on Apex. And with respect to Edgeful, if you use that link in the description of the video, you will get a free 1-week trial. That's what I have for you right now. I will be posting an update video later on today after the market closes to recap everything, and then also to set you up for what to pay attention to tomorrow. That's what I have for you guys. I hope you crush it. what I'm like, my big tip here would be wait for this consolidation to break. If it breaks to the downside, I think that's a non-play today, just because you're kind of fighting the shorter term trend. But if this consolidation ends and we start to pick up, when I say it picks up, I'm talking about that delta. I'm talking about all of a sudden puts being sold, calls being bought. Not only in terms of price action, do we take out recent highs, but I want to see that delta popping. If we see that delta popping, in my book, that would kind of be that A+ setup to play to, obviously, the key levels that I laid out at the beginning of today's show. So that's what I'll be looking for the remainder of the day. And I hope you absolutely crush it. I hope you make a shitload of money. I'll catch you in the update video tonight. Should be coming out around 7:30 p.m. And then we'll be streaming once again tomorrow morning, 9 a.m. bright and early. I hope to see you there. Peace out.